In this video, we are going to talk about how to understand cryptocurrency prices. So before starting, please like this video and subscribe to this channel for future updates. To trade cryptocurrencies, you must first understand price movement. It's simple to examine both current and historical pricing changes, but reading them demands more knowledge. Cryptocurrency charts show the price movement over time. They are used in technical analysis to forecast future price fluctuations. The Daily Coin Beginner's Tutorial teaches you how to interpret Bitcoin charts. The crypto charts. Cryptocurrency charts are price patterns that assist predict the future of digital assets. They also predict the market's direction. Those who can interpret crypto charts can use them to assist decide whether to initiate or cancel a trade. Many traders use price charts to analyze patterns and forecast trends. How to understand Bitcoin charts. Number 1. Follow the trend. The trend is the overall direction of the asset price. It helps to comprehend the pricing trend. Identifying patterns is crucial to making good decisions. For beginner traders, following a trend is the greatest approach. Trend is a friend, says one. The cryptocurrency markets are unpredictable, and price swings may be dramatic. Predicting them can be difficult. An overall vision and basic direction might benefit you a lot. Trends can be characterized by directions, bullish tendencies. The asset's price grows steadily, with higher highs and lower lows. As a result, the price lowers. Horizontal trend. Price oscillates between strong support and resistance. Trends are determined by a timeline. Digital asset prices are variable. Moreover, many price trends may occur concurrently. So it's critical to set a time range for measuring pricing fluctuations. Trends can be classified based on time. Trend. Depending on the strength, 3 to 5 years. Trend. It might last a week or months. Trending now. It's usually 1 hour to 1 week. A volume is useful in confirming patterns. It shows the level of passion that may push up prices. Larger trade volumes provide stronger market signals. Trading volume frequently increases in upswing markets. When the price lowers, the volume falls. Also, declining volume when the price is rising indicates a reversal. Number 2. Charts of prices. Chart kinds. Plotting the price of a digital asset is the most common and commonly used are graphs. The basic chart shows the closing or starting price of a crypto asset in a specified time frame. How to read Bitcoin line charts, graphs. A chart that shows the starting and closing prices, as well as the highs and lows of a time frame. Candlesticks. Like bar charts, but with a body and more visibility. While the candlestick pattern is most commonly utilized by digital asset traders, Daily Coin will teach you how to read Bitcoin charts and spot trading opportunities. What does it say? Candlestick charts are one of the most visually appealing Bitcoin price charts. These graphs are clear. An individual candlestick, 1H, 1W, 1M, 1Y, symbolizes a given period of time in trading or evaluating historical price fluctuations. Green and red candles are available. They show the market's direction. Bulls, green candle, or bears, red candle, and the candlesticks inform. Each candle shows 4 facts at once. The candle's body displays the asset's price. The green candle indicates a higher closing price. The red one shows a price decline when the closing price is lower. Finally, the candle's wicks, or shadows, show the highest and lowest prices throughout time. The wick's length tells us a lot about trading. It signifies that trading sessions occurred between the opening and closing prices. Long wicks indicate price volatility. Candlesticks are superb trend predictors. You may use several candlestick patterns, but a skilled trader shouldn't rely on them. Trading using candlesticks is a fantastic way to confirm trends and join the market. Chart patterns. Reading Bitcoin price chart patterns is a crucial skill for effective trading. There are 3 primary types. Continuation mode. This indicator tends to confirm the price trend. Continuation patterns represent the period of a pause following a trend. They form when the market anticipates a price direction to continue. Pattern continuation. The stronger the trend prior to the continuation pattern, the stronger the breakout. Sadly, not all continuation patterns result in trend continuance. Many of them are reversed. The most common chart patterns are flags. Occurs when an asset's price moves strongly and then pauses. Allows market entry in the middle of a trend. Pennants. After a fast ascent, they signal a halt in an uptrend. Wedges. Pattern continuation or reversal. It depends on the pricing chart. The continuation pattern in crypto charts. Pattern reversal. Reversal patterns occur when a rising market transforms into a declining market. Most common reversal chart patterns, 2x tops and bottoms, signal a trend change from up to down. 2 peaks, bottoms form at almost the same level. Shoulders, strong trends form. In the next leg up, prices establish the peaks and then break. Wedges, depending on the prior trend. It may be a continuation or reversal. Rising wedge is negative, falling wedge is positive. Triangles expanding in turbulent markets. A difficult pattern emerges, forms when prices constantly rise and fall. 3-piece tops or bottoms like double shirts and bottoms. 3 peaks, bottoms form a barrier that prices can't break and eventually reverse. Reversal patterns occur when a rising market transforms into a declining market. Most common reversal chart patterns. Neutrals. The direction of the next breakout is uncertain. The price may rise or fall. So be cautious while trading neutral chart patterns. Wait for a price breakthrough and trend confirmation before entering or exiting a trade. The most common neutral patterns are triangle ascent, inverted trend lines, indicates a deteriorating resistance level that may be broken. Triangle descent, low lows, lofty highs, the descending triangle. If the support level weakens, the system may fail. Triangle symmetry, price oscillates between support and resistance levels. No one wins. Symmetrical triangle expanse, rare pattern that defies trend. Price reaches new highs and lows. No one has enough strength to stop the breakout. Neutral patterns and triangular patterns on crypto charts. Move averages, MA. Moving averages, MA, are a fundamental technical indicator. In general, they indicate the asset's average price over time. MA aids in determining the current trend direction. SMA stands for the simple moving average. For a certain time frame, add the closing prices and divide by the number of prices. Then you receive the time period's average price. Here's one. Calculate X's SMA for the previous 5 trading days. SMA 5. Assume asset prices were $20, $22, $26, $25, and $21. First, add up all the prices. $20 plus $22 plus $26 plus 25 plus 21% equals $114. Then divide $114 by the number of days. 5. 114% equals 22.8. Your 5-day average cost is $22.80. The SMA, like all moving averages, evolves. The asset's closing prices fluctuate. So, to calculate the SMA for 10 or 20 days, add the closing prices of the last 10 or 20 days. You may also use 2 SMAs to understand crypto charts. In this case, we'll use SMA 50 and SMA 200. The exponential moving average, EMA, measures the asset's price over time. But EMA looks at fresh pricing. The exponential moving average reacts faster to price movements. EMA is more price sensitive than SMA. It detects price patterns and delivers more weighted data. By adding the most recent price to the previous EMA calculation, EMAs are read like SMAs. Trends rise when the short-term EMA passes the long-term EMA. EMA passes below short-term EMA. Market moves downward. Moving average divergence, MACD. Moving average convergence divergence, MACD, is a popular trend following indicator. MACD is derived by subtracting the longer EMA from the shorter EMA. The MACD line is obtained by subtracting 26 days EMA from 12 days EMA. The MACD line always has the signal line, which is generally a 9-day EMA. A histogram shows the distance between the MACD and the signal line. The MACD will be above the signal line and the histogram will be above the baseline. MACD below the signal line means histogram below the baseline. MACD and signal line crossovers can also confirm trends. They also assist highlight proper entry or exit points. It's easy to read if you follow the fundamental guidelines. Trends upward. MACD line follows the trend. It crosses the signal line. The MACD is below the baseline. The trend is down. The MACD line passes below the signal line in the histogram. How to interpret Bitcoin charts MACD graph. Number 3. Crypto Fear and Greed Index. Trading requires good psychological skills. Markets are typically driven by emotions. Even skilled traders make illogical judgments. The Crypto Fear and Greed Index may help you manage the turbulent cryptocurrency markets. It depicts the market's sentiment at a certain period. The index is produced using data from many sources, such as historical asset volume and volatility, social media mentions, and search engine results. Have you invested in crypto? Let us know in the comment box below. Please like this video and subscribe to this channel for our future updates. Thank you.